Hi all, welcome to Navya Markets Limited. Autoline Industries is our latest buy call from the auto component space. Hope you all are aware of the fact that we have already generated a buy call in Autoline Industries in September 2010 and it has reached our target in just a month's time. Again, the stock has come down to very attractive levels which made us reinitiate coverage of the buy call in this counter. Autoline Industries is a medium-sized auto ancillary company manufacturing metal sheet components, sub-assemblies and assemblies for large OEMs in the automobile industry. For example, it manufactures the load body for Tata Ace. It is engaged in the conceptualizing, styling, design engineering, prototyping and manufacturing of auto components, especially in the areas of metal sheet and small mechanical assemblies. And through these things, conceptualization, styling and all, it was able to provide the extra valuation for the company, for its customers, that is Tata Motors, Bajaj and so on. And due to this extra valuation, it is able to get the necessary competitive advantage over its peers in the industry. So that is the reason for it to penetrate significantly in the industry. From a growth perspective, we see the company has seen tremendous growth since its incorporation, especially in the last 5 years, as its sales grew at a CAGR of 32% and profit at a CAGR of 49% over the past 5 years up to FY 2010. And one more very important point is that, and as stated earlier, it is one of the cheapest stocks available in the auto component space with a PE of 5 and a price to book value of 0.6 for FY 2011-12 expected financial year at the current market price. So this is a very cheap level. If we're talking about a book, price which is less than the book value, for FY 2011-12. So that is quite cheap. And one more very important point is that if you see in the auto component industry as such, there is a huge shortage of auto components, and there is tight supply demand in this industry. And this is continuing for the past 10 years or so. Sorry, past 10 months or so, and even the presently the situation is existent. And considering such a shortage of components in the industry, there is a strong demand for auto components, and companies which will be able to increase their capacities significantly will be able to capitalize on this strong demand. Autoline Industries is exactly doing the same. It is significantly increasing its capacities by rupees 255 crore, which are expected to be commissioned by 2011. And not only that, it has also undergone one of the highest cumulative capacity expansions over the past 3 years in terms of rate of growth. And these huge capacity expansions will very well help the company to increase its volume significantly going forward, which will in turn increase its top line as well as bottom line for the future years. Another point is that, of course, this is the point through which we have seen value in the company, strong value in the stock price. The company owns near to 100 acre land in the Chakan area, which alone is worth rupees 83 per equity share. That is 60% of the current market price. So that indicates how much cheaply the stock is presently available. 60% of the stock current market price is just attributable to a land which it is holding in the Chakan area, Pune, 100 acre land. So that indicates the strong value in the stock as well as the company. Coming to valuations, the stock is presently trading at 5.6 times its FY 2010-11 EPS and 5 times its FY 2011-12 EPS. According to our DCF valuation based on conservative growth estimates, talking about growth estimates, we are taken on a very conservative basis. We have also discounted for the higher raw material prices. We have taken top line as well as bottom line on the on a lower side. So even after considering such conservative growth estimates, our TCF valuation has finally given a value of fair value of rupees 182 for the stock price, which is 30% higher than the current market price. So even though we have taken did our valuation on a conservative basis, we have arrived at a value which is 30% higher than our current market price, than the present market price. So that indicates a strong value in the company, and so we recommend long-term investors to invest in the stock from a long-term perspective, for a target of rupees 182, that is 30% higher than the present levels, to reach the target in a 8 to 10 month duration. So Yeah, and one more thing is we want to reiterate about the risk. Um, if any abnormal rise in the raw material prices as happened in 2008 can have an adverse impact on the raw material cost of the company. So I mean that can hit the profitability of the company. Um, and one more risk is that it's highly dependent on Tata Motors Limited. So any significant impact on the operation of Tata Motors can also have an parallel impact on Autoline Industries operations. But Tata Motors is really doing really good, and going forward also we expect it to do good. So in such situation the risk is less lower. So as I said, positive factors for the stock highly outweigh the negative factors. So we recommend long-term investors to consider investing in the stock from a long-term perspective, and the chances of the stock reaching 182, I mean 30% higher from the current levels is highly, very high. And one more, and also one more thing is that we can very well revise the target once the target reaches the it's the prescribed levels, and that in case we do that, it will be very well implemented to the clients as such. Uh, so we hope you buy this stock on our recommendation. Thank you all.